What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. So, we just had a major announcement from the Fed here today, and I'll let you hear it directly from them. And then we'll go over exactly what this is going to mean for you and for millions of Americans here across the United States, and what this is going to mean going forward, because we're going to have even more announcements like this coming in the very near future, actually. So yeah, this is getting pretty major here, and a lot of people are saying this is too much. Why is this continuing to happen? So we'll go over what's going to happen here in the near future as well, and also what kind of support and help we might be seeing here for Americans as well. If you've been watching my channel, you know that there is state stimulus checks, inflation relief checks, property tax relief checks going on here in at least 33 different states already. We have the student loan forgiveness program on the federal level going on for over 40 million Americans. It's currently tied up in a lawsuit right now and is going to be going to the Supreme Court. The Supreme Court just about 2 weeks ago actually ruled that it was legal for the president to do this. He did this through presidential executive order. And a Republican Supreme Court Justice, Amy Coney Barrett, who was appointed by former President Donald Trump, she's a Republican, actually ruled that it was legal. Now another lawsuit. They're just, the Republicans are just trying to find like one or two people to try to block, where there's like certain circumstances to try to block this help for over 40 million Americans. So now another case is going to the Supreme Court Justice. But really, we're now seeing what other type of programs might be out there to help millions of Americans. So, and really, when we see announcements like what is just happening here today, I'll let you hear it here in just a moment. Um, a lot of people are saying we probably need more help with how bad inflation is, and things are getting really kind of worse. So I'll keep you up to date here with everything. If you're new to our channel or you haven't subscribed yet, make sure to click the subscribe button down below, and then the bell icon, which appears after you subscribe. It's completely free to do so. Part of my mission here on this YouTube channel is to keep you guys updated and up to date here with everything that might concern you and your finances. And really, there's a lot of these programs here that help out Americans here that you might not even know about. So as part of my daily commitment here, remember that my YouTube videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time, and I will keep you up to date here. So let's go here to directly to the head of the Federal Reserve, Jerome Powell, with their announcement here today. Take a listen.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
So let's dissect multiple different things here. First up, the Federal Reserve, which is technically a separate entity than the government, kind of. So the head of the Fed, Jerome Powell, which is the man who was speaking there, he gets appointed by a president. He was appointed by former President Donald Trump initially, and then so he is a Republican. Current President Biden chose to keep him in there. Okay, so he decided, yeah, he can stay there. He's doing a pretty decent job. But they technically are separate from the government because once they're elected, there's a board of directors. So it's not just Jerome Powell gets to make this decision by themselves. There's a board of directors, and they vote on the best decisions to make for the country. And their main tool is whether or not to raise interest rates, lower them, and this affects basically millions, almost the entire country. You can see here, this Federal Reserve interest rate, it affects anything that has to do with loans and interest rates that are variable rates. So credit cards, interest rates, new mortgages, variable rate mortgages, new car loans, new used car loans, new personal loans, all going up probably here yet again. And in fact, credit card interest rates are the highest they have ever been in the history of credit card interest rates. In fact, I actually have the most recent average credit card interest rates here as of this past week. And APRs will continue soaring if lenders continue to follow federal rate hikes, which they will. So credit card interest rates will be going up here yet again. And this is for anybody that has a credit card or a credit card debt or money on their credit card that's not paid off every month, because credit cards are not locked in interest rates. Right now, the average credit card interest rate is at 18.94%. So just about 19% is the average credit card interest rate. Yeah, so just under 20%, and will now be likely going up even more. Yeah, this is according to creditcards.com, the latest weekly rate report. And the national average card APR, annual percentage rate, climbed Wednesday to its highest point on record, falling just 6 basis points short of 19% on Wednesday for the first time since creditcards.com began tracking it in mid-2007. That's up since 16.1% earlier this year in March, when the Federal Reserve, began raising interest rates. So, yeah, that means credit card interest rates alone are up just about 3% already this year. Every single year, you're paying an extra 3%. Mortgage rates, again, the same, actually, maybe even more. They've gone from 3% or a little bit under 3%. Now the average mortgage rate is 7%, which actually is, in comparison, kind of worse, because you've gone from 3% to 7%. That's double, more than double. Yeah. And we're now having another interest rate hike go up by 0.75%, 75 basis points, almost another full percent. So that just happens here today. This is going to now make loans and interest rates more expensive. Yeah. And really, this hurts. This doesn't hurt the rich. This hurts people that low and middle income, average everyday Americans, people that got to go to work every day and pay for everything. And I mean, we're already starting to see things like this. As inflation heats up, 64% of Americans are now living paycheck to paycheck. 64% of Americans. So keep that number in mind, 64% of Americans. And then a recent poll just came out here that said 63% of Americans support the federal government sending more inflation relief checks or stimulus checks, whatever you want to call them. This comes as at least 33 different states are doing this right now, sending out state stimulus checks, inflation relief checks, property tax rebate checks. I'll link you to a video here I just did on some of these states sending these out here right now. Only 18% indicated they do not support federal inflation relief checks. These are probably the people that have money and don't really need to worry about this. So 64% of Americans living paycheck to paycheck, 63% of Americans support the federal government sending inflation relief checks. So honestly, it seems like a very popular thing to do. It sounds like Congress should do what people need. I mean, if people are struggling just to buy food, I mean, again, you guys can let me know your thoughts here on this. Also, just today, 2 in 3 people say say the U.S. is in a recession. Yeah, 65% of respondents indicated they believe the economy is already in a recession, compared to only 22% who said the opposite. 14% said they didn't know or had no opinion. So, I mean, look at this. I mean, 65% think we're in a recession. 63% support the federal government sending more inflation relief checks. And what was the other number? 64% of Americans are already living paycheck to paycheck. So, I mean, if this doesn't send a clear message to our government officials that are supposed to be for the people. They're elected to help the people and I mean, do what the people need, right? I mean, they're there to support the people and do what the people, the majority of people want and need. Right? I mean, right? I mean, they're supposed to do what is best for the people, right? And right now is help them out in their time of need. I mean, look at how bad inflation is. Look at how bad things are getting, and remember that right now. States are taking in more money than ever. The federal government is actually taking in more money than ever. Here's a headline right now. Yeah, here directly from the New York Times, federal budget deficit fell to $1.4 trillion as pandemic spending eased. Here's another one from CNBC. The U.S. budget deficit was sliced in half for U.S. fiscal year 2022, the biggest drop in history following 2 years of huge COVID related spending. The shortfall declined to 1.37 trillion, and revenue posted was easily the highest 1 year total on record. So the revenue for the government was the highest revenue recorded for 1 year for the government ever, ever. And this actually included the money, the help, the stimulus help, that's going to help 40 plus million Americans with the student loan forgiveness. So for those people, it is going to be a massive amount of help. But what about the other people? There's still a lot of people that aren't going to benefit from that. I mean, it is going to help 40, 43 million Americans, provided that it doesn't get blocked from the Supreme Court. The Supreme Court did uphold it once by a Republican Justice Amy Coney Barrett, but there's another challenge going on here now. They're literally trying to find one or two people in the entire country that might find one way to block it for over 40 million Americans who, would need this help. Um, and really, you got to kind of think what, first of all, it's 40 million Americans that could really use some help right now. Also, what the next type of help would be: rent assistance, mortgage assistance, utility assistance, stimulus checks. All this stuff is stuff that has been going on, and even some of it's going on right now. I just did a video about utility assistance that actually just started here a day ago in some states, and some states are going to be starting this month and next month. I'll link you to that video next. Billions of dollars for Americans. So you got to really think here that there's a lot of stuff going on here. It's part of the reason why you watch my channel. I keep you up to date here on this. But these interest rate hikes are going to make it worse on Americans. So you let me know. Should the government be helping people or say, nope, no help, we're not going to help? The states are taking it upon themselves. Over 33 different states are saying, yes, let's help our people. So, and honestly, there's going to be states doing this next year as well, because look at how many states have budget surpluses. So, and I'll keep you up to date here on all this stuff. So if you're new here, if you haven't yet, make sure to click the subscribe button down below so you don't miss out on new videos. It's completely free to do so, and I'll link you to some videos here you should watch next as well. After you subscribe, click the bell icon. This way you won't miss out on new videos, and don't forget to hit the like button for us as well. You can click this video here to watch my newest video about some states that are sending out checks to millions of Americans. And here's my newest video about utility assistance that's going out or how to get it here, billions of dollars as well. So click on one of those videos next. Thanks for watching, guys, and I will see you in the next video.